Hey guys, welcome back to another episode. Today we're going to take a quick look at another earnings for here. Taking a quick look at Unity. We all know Unity if you're familiar with this channel. This is luckily a tier 1 stock for me today, up 15%. Yesterday wasn't too good, right? We had Facebook down 25%. Today seems to be the other way around, right? We have Unity up. Another company that just reported today. What's going on, Big Buck? Was Amazon. This is insane. I think this is ridiculous. I mean, obviously it was down 7% today, but a huge company up 7%. I mean, this is a $1.4 trillion company up 17% after hours. I just don't know what to do with this market. Big Buck, how are you doing, man? How's everything? Hope the family's doing well. Hope you're doing well. Like always, appreciate the support. What's going on, Wall Street? How's it going? We have a lot of earnings today, I think. But today, before we jump into the kind of call, let's go, Yaniv. What's going on? I just want to take a quick look at their earnings, and then we'll jump into their call that starts at 5. But this company, hey, Unity, fourth quarter revenue up 43%. Insane. For the full year, revenue was up 44%. We can see there are two main markets, the creative solutions. This is where you make your game and you kind of pay for the creation of your game, was almost 100 million, up 49%. Their operate solutions, this is after the game has been created. Their advertising, what other type of services they do to maintain the game, is the biggest driver, and that was up 45%. Unfortunately, the company is still not profitable. Non-GAAP loss from operations was 12 million. Not a big chunk. It's only 4% of revenue. I personally am not too worried about it, especially if we take a look at net cash. This quarter alone, they used about $40 million in cash flow from operations, but this is a company with $1.1 billion in cash. So yes, this is a company not profitable at the moment. I know some people might not like that, but it's not a company I would be worried about. They have plenty of cash to be able to continue their growth. It's not like they're burning ridiculous amount of cash, and it's not like growth is slowing down. Growth is still pretty strong there. They're also seeing a growth in customers that generate more than $100,000 in revenue in the trailing 12 months. That increased over 35%, I would say, from 793 to 1,052. What's going on, Michael? How's everything? Calm me now. Calm me now. Market's going crazy after hours. Yes, that's definitely pretty crazy with the market. Some final things I kind of highlighted before the earnings call. Unity is doing crazy amount of acquisitions. Just this year in 2021, they bought Parsec and SyncCatch to kind of allow the online collaboration. They also bought a lot of tools and technologies to help the creators like Weta Digital, Interactive Data, which are the makers of SpeedTree. And most recently, they kind of purchased Ziva Dynamics, which is probably one of my favorite acquisitions out there. They also continue to say that, hey, Unity monetization, which is their advertising segment, drove more than 2 billion net new installs. So their advertising segment continues to be strong, and pretty much, I want to say, a strong quarter. Nothing that I personally would be worried about. Guidance for the year is going to be somewhere for quarter one is somewhere between 34 to 36% year-over-year growth. So we're still seeing this as a growth machine. Unfortunately, still burning a little bit of cash, but like I mentioned, they have plenty of cash flow. And for the full year of 2022, they are expecting guidance in the mid-30s as well. So overall, strong growth. I do believe that's going to, these are weak earnings, and they're gonna beat those expectations easily. So let's see if we can jump into the presentation. Let's join that webcast and let me know. Open Zoom meeting. Let's see. I don't need you guys emailing me every day. All right, the webinar is gonna begin soon. So I kind of flew through that. I thought I was gonna miss it. Snap, yeah, Snap is up 58%. That's insane. That is insane on Snap. Using Zoom, load up on Zoom for sure. You know what was pretty interesting, Buck? There was well, this is kind of loading. They mentioned that eBay is actually using them. Let's see if I can get it here. where was it? So eBay partnered up with Unity to enable sellers to showcase the actual item they are selling in Unity's proprietary interactive 360 view. So obviously, eBay might not be the funnest e-commerce target, but imagine if Unity starts to partner up with Shopify. Imagine if they start partnering up with Amazon or some of these other players, Etsy, Pinterest. I think that opened them up to a whole new market just by partnering up with eBay. So we see
Recording in
things are
progress.
Structure
connecting.
to past calls. John and Luis will provide a business overview. Then we'll answer kind of the three questions that we've received.
What's going on, Fizz?
From
And let me know if you guys could
analysts,
hear.
And then we will open up the call to panelists to open Q&A, and we plan to wrap the call up within an hour. Now, before we start, I'll run through our safe harbor statement. As you know, so we would like to say, I'd like to remind participants that during this conference call, we will be making forward-looking statements, including statements about goals, business outlook, industry trends, market opportunities,
What's going on,
expectations for
Musica?
future financial
I'll
performance.
have my
and
dinner
similar
real quick,
items,
guys. Haven't eaten
all
all
of
day.
which are subject to risks, uncertainties, and assumptions. You can find more information about these risks and uncertainties in the risk factors section of our filings at sec.gov. And we remind everyone that our actual results may differ, and we take no obligation to revise or update any forward-looking statements. Now, we will also be discussing non-GAAP financial measures today and reconciliations between our GAAP and non-GAAP financial results. And a discussion of the limitations of our non-GAAP financial measures can be found in our earnings press release, which was issued earlier today and is available on our website under the Investor Relations tab. So now with that, let me turn the call over to John.
So thanks, Richard, and good afternoon, everyone. We delivered another really strong quarter, October to December, to close out 21
Was that the
with
robots?
great momentum. For the quarter, revenue grew 43% year over year to $316 million, and our non-GAAP operating margin was minus 3.8%, expanding 530 basis points from a year earlier. Underpinning our growth, our healthy net dollar expansion rate of 140%, and the addition of 259 customers, each generating over 100,000 of revenue in the trailing 12 months, reaching 1,052 customers at that scale at the end of the year, up from 793 a year before. For the full year, revenue of $1.1 billion grew 44% from a year earlier, and non-GAAP operating margins were minus 4.6%, an improvement of 200 basis points from a year ago. With very healthy gross margins, and our largest expense being R&D, ours is inherently a high net margin business. We're committed to continuing to improve operating margins as we continue to gain scale. These results have been and will continue to be driven by excellence and execution by the Unity team. We have built our business on a strong foundation based on very healthy customer metrics and structural economics. We entered 22 with momentum across both create and operate, which gives us confidence in our outlook. For the year, we expect to grow revenue to be between $1.485 billion and $1.505 billion, which represents growth between 34 and 36% from 2021. And we believe Unity is very well positioned in a fast-growing market, which we are expanding even further with internal innovation and strategic acquisitions. As we've said before, we expect to grow revenue above 30% for the long term and expect to expand operating margins sequentially, breaking even on a non-GAAP basis within 2023. With that, let me explain why I'm personally very optimistic about Unity's prospects. First, we participate in a massive market with significant tailwinds. At the time of our IPO, we estimated our total addressable market was $29 billion for create and operate. Our current best estimate is $45 billion. This expansion is driven by growth of markets in which we compete, plus the addition of new markets as we extend our offering to new users and new use cases. We believe that the transitions from 2D to 3D, from non-real-time to real-time, from non-interactive to interactive, creates a massive growth opportunity for many decades to come. This new world that is emerging is more immersive, more engaging, and opens opportunities for gaming, to e-commerce, automotive, architecture, media and entertainment, and many other sectors. So point number one, big market, rapidly growing, great tailwinds. Now, second, Unity is the leader in real-time 3D, and we're very well positioned to capitalize on these trends. We have a strong and growing market share in all of our sectors and across multiple industries. During 2021, we expanded our market share in the fastest growing segments in the gaming market, mobile, AR, VR. Real-time 3D is growing, and within this large and fast-growing market, Unity is winning. Our non-gaming businesses is growing even faster as we add customers across multiple industries. We believe there is significant upside as we have embedded structural advantages. With Unity, creators develop once and deploy to many platforms, and unlike other companies, we don't compete with our customers. The Unity platform is designed to help creators through the entire life cycle of a runtime application, from ideation to launch to monetization, hosting, and ongoing analytics to drive growth. So point number 2, we think our leadership position is strong and we're growing it, and we continue to do that. Third, we're expanding our addressable market with innovation around new products and strategic acquisitions. For north of a decade, we've been innovating and adding capabilities through our own product development and via acquisition to help solve problems our customers share with us. We originally moved from a few platforms to over 24 in specific response to customer needs. More recently, the addition of Parsec, Weta Digital, and the Unity gaming services are great examples that address customer pain points and also increase our addressable market. Parsec empowers some of the world's most inspiring and creative companies to freely work and play from anywhere on any device on their own terms. With Weta Digital, Unity creates a pathway for any artist from any industry to create with the most powerful tools. Unity Gaming Services unifies existing solutions and introduces new tools and services to simplify launching and operating cross-platform multiplayer games. These initiatives are expected to continue to expand our total addressable and serviceable markets and continue to increase the value of the Unity platform for our customers as we solve more and more of creators' most challenging problems. Now, this takes us to point number 4. We believe that we have a unique platform that will endure the test of time. And as I've said earlier, the process of building our platform is at the very center of our strategic process, whereby we add value to our platform while increasing our total addressable market. We aim to offer significant and increasing value to creators and artists as we reduce their operational complexity and ease their on-ramp. Building this platform requires time, focus, and commitment. We have devoted tens of thousands of developer hours to deliver speed, scalability, stability, and ease of use. We have built trusted relationships with all the major platforms to the point where they share with us their product roadmaps. These partnerships are critical differentiators in the market. In the coming years, we plan to solve more and more of these creators' challenges by offering new features and services. And this shows up and has shown up consistently in a very healthy dollar-based net retention rate. And lastly, across Unity, we have an amazing team of innovators. Unity is an innovation machine. Monetization is a great example. We entered this business in 2014 and have not stopped innovating ever since. We hire the best and brightest product leaders, engineers, data scientists, and focus on improving player experience. We operate with the developer's interest in mind and ensure our products contribute to their long-term success. As a result, we have consistently gained market share, including this last year, when we executed with excellence in an IDFA challenge environment.
John is so chill.
Many examples
I feel like he has a great
where
presentation
Unity's
voice.
innovation is making a significant difference for creators. Now, I'm proud of what we've achieved so far at Unity, and I'm excited about the future that we can and will create. We are executing with excellence in a large and growing market that we are strategically expanding through internal innovation and acquisition. We have a defensible platform that adds significant value to our customers and keeps on getting better. Now, before we turn over the call to Luis, I want to share with you the magic of Ziva and Unity. This is our latest acquisition. I believe it's got huge potential. Let's show them what we want to share.
Yeah, I think Ziva is probably one of my favorite acquisitions that they've made so far. Oh, here we're going to see this.
Hi, I'm a virtual human created by Ziva Dynamics. I'm powered by state-of-the-art biomechanical simulation, and I'm running in real time in Unity. But enough about me. I have some even more amazing news to share with you today. I'm excited to announce that today, Ziva, my creators, are now part of the Unity family. Unity and Ziva have a shared vision of making realistic, lifelike character creation accessible and scalable for all artists, regardless of skill level. And it's not just for virtual humans like me, but for any kind of creature, monster, or animal imaginable, realistic or stylized. Ziva's leadership in character simulation, deformation, and machine learning, along with Unity's deep knowledge of real-time technology, makes this an effortless and powerful partnership. As we grow together, Unity and Ziva will continue serving the many innovative teams, creators, and engines that use our technology. By acquiring Ziva, Unity will further democratize Ziva's best-in-class tools to allow artists like you to create digital characters like me. We want to thank you for all of your support over the past 7 years. Ziva has learned so much, and we couldn't have done any of it without your passion and dedication to incredible digital art. It's been a whirlwind journey, but I'm certain it's just the start.
Thank you, John. I'm back to a normal, real human being here. I've watched this video many times.
Luis is also pretty funny. I like
by the
him
amazing
too.
technology. So let's begin with the key financial highlights. Revenue for the fourth quarter of $316 million increased by 43% as compared to the prior year's fourth quarter. These results include $4 million in license fee from Weta FX. Excluding this, revenue for the quarter would have increased 41% year over year. Results for the quarter beat guidance again. As you would expect, every quarter has risk and opportunities. Since we prudently assess risk when constructing guidance, we can beat guidance if things fall our way. In the fourth quarter, Create accelerated growth, the Weta acquisition closed a month earlier than expected, and Operate continued to perform very strongly. Revenue for the full year of $1.1 billion increased 44% year
Unity
over
bought
year,
them
behind
a
strong
few weeks ago.
execution by the Unity team. Our performance for the year came in significantly above our initial guidance of revenue growth of 23 to 26%. Importantly, our performance is broad-based. Operate delivered another strong quarter with 45% year-over-year revenue growth, bringing the full year to $709 million, an increase of 51% from the prior year, as we helped our customers in a challenging IDFA environment. Create accelerated again in the fourth quarter and delivered 49% year-over-year revenue growth. This brings Create's total revenue to $327 million for the full year, an increase of 41% from a year earlier. Strategic partnerships revenue grew 12% this quarter and delivered $70 million for the full year, an increase of 7% from a year earlier. We continue to see strong customer success this quarter. Our dollar-based net expansion rate for the fourth quarter was 140%, up from 138% in the fourth quarter of 2020.
That's insane on that net expansion rate.
And we continue to grow customers generating more than $100,000 of revenue in the trailing 12 months, from 793 a year ago to 1,052. Revenue from this
and that's what you like to see, an increase of customers that pay a lot of money.
For total revenue in the fourth quarter of 2021, up from 80% in the same quarter a year ago, reflecting a closer, more meaningful partnership with our customers. We generated non-GAAP operating loss of $12 million in the fourth quarter, which compares to a non-GAAP operating loss of $20 million in the fourth quarter a year earlier.
Yeah, this company is losing, but $12 million compared to the growth that they're seeing, the amount of cash that they have, nothing I would worry about.
Basis points from a year earlier. This brings the full year non-GAAP operating margin to minus 4.6, an improvement of 200 basis points from 2020. Our performance for the year came in significantly above our initial guidance of non-GAAP operating margin of minus 11 to minus 9%. Our margin expansion comes from improvements in non-GAAP gross margin and leverage in sales and marketing and general and administrative costs. Non-GAAP gross margin of 80% for the quarter and the full year are up 160 and 90 basis points from their respective prior year periods. The non-GAAP gross margin improvements are mainly driven by efficiencies in cloud hosting costs. Free cash flow of minus $53 million for the fourth quarter was impacted by timing of payroll taxes and normal quarter-to-quarter working capital fluctuations. Free cash flow margin for the year is minus 14%, including a $50 million one-time charge to terminate a lease agreement in San Francisco, which we recorded in the second quarter. Excluding this charge, free cash flow margin for the year would have been minus 9%. Acquisitions continue to advance our strategic priorities. We added key capabilities and expanded our addressable market with
I feel like they're going to
acquisitions
continue to
that
do
closed this quarter.
acquisitions.
Weta
I wouldn't be
Digital,
surprised if
an
in the
asset
next
purchase which
quarter
we
they
closed in
announced another
December,
acquisition.
enables us to put the incredibly exclusive and sophisticated tools in the hands of millions of creators and artists around the world. And once integrated onto the Unity platform, enable the next generation of real-time 3D creativity. Ziva, which we closed in December, democratizes high-quality character creation for all artists by reducing time and cost, by leveraging state-of-the-art biomechanical simulation and machine learning. And finally, SyncSketch, which we closed in November, enables cloud-based, secure, and effortless collaboration, rapid review, and feedback between remote creators. Last, we increased our financial flexibility by issuing an aggregate of $1.725 billion 5-year convertible notes with a 0% coupon and conversion at $308.72 per share. We also entered into a capped call transaction to reduce potential dilution caused by the notes, with a cap price of $343.02 per share. The net proceeds from the issuance of the notes were $1.65 billion, net of debt issuance cost and cash used to purchase the capped call transactions. Let's dig in a little bit deeper before we go into guidance. Operate had a terrific year. We're passionate about partnering with our customers, from the 2-person development team who pursue their passion of making games to the large game publishers with millions of players who need to constantly innovate to stay competitive and keep their players engaged. Over the past year, the Operate team supported more than 200,000 game launches.
That's
Our
insane.
customers
That's
are
a lot of games.
increasingly harnessing the power of our multiplayer suite, enabling them to access cross-platform multiplayer games, which is the experience that almost 60% of gamers are looking for. With our recent launch of Unity Gaming Services, we're making it even easier for developers to tap into this trend in the fast-growing segment of gaming. We also saw strong performance from our sophisticated analytics tools and products, such as Audience Pinpointer, that deliver strong return on investment to our customers without manual guesswork. To win in a highly competitive market, we're constantly innovating, optimizing our machine learning models, improving our campaign and performance models, and generating actionable insights for our customers' campaigns and enabling them to make informed decisions. As a result, we estimate that our monetization business has been, over each of the last 5 years, including 2021, consistently growing about twice as fast as the market. In addition, we're focused on providing infrastructure for synchronous multiplayer experiences and community service for vibrant social interactions. I also want to call out Unity Mediation, which we launched last quarter. Our offering includes waterfall and bidding to help developers build strong revenue streams by easily optimizing demand from their best performing ad formats and network partners within the same editor and interface they build and manage their game experience. We're seeing strong initial traction in the market in the short period of time since launch, including some of the top publishers.
I'm just here for the Q&A. Hopefully
now
they get
moving
to
on
that
to
soon.
Create. Unity continues to grow within games, increasing our reach with top-tier publishers as well as platform providers. During the fourth quarter, top publishers launched key multi-platform games built on Unity, such as Riot Forge's Ruined King, a League of Legends story, developed in collaboration with Airship Syndicate and published simultaneously across Windows PC, Nintendo Switch, Sony PlayStation 4, and Xbox One. Another example is a partnership with NewWiz
Oh, that's pretty cool. I didn't
on
know
their
they did that.
multi-platform AAA MMO games. This and many other partnerships enabled Unity to expand our market share within the top 1,000 mobile games in 2021. Now, the real-time 3D capabilities that game developers love and use every day are also enabling us to win outside of gaming. We continue to make progress across industries and use cases and expect to build long-term partnerships as Unity software is embedded into our customers' digital strategy. Our non-gaming business grew over 70% year over year in 2021 and now represents 25% of our total Create revenue, up from 20% in 2020. Let me give you a few examples. Unity is partnering with Hyundai Motors to connect an actual factory with its digital twin to enhance plant management, drive productivity, and innovate in the manufacturing process. Hyundai considers this initiative and partnership with Unity a game
That's pretty
changer.
cool. Non-gaming grew
Unity is
75%
also
year over
partnering
year
with eBay
and presents
to enable
25%
sellers to
of
showcase
Create
the
revenue.
actual
I
item
think I
they're
got that
offering
right.
with our proprietary interactive 360-degree view. This experience will help buyers shop with greater confidence, starting with sneakers. We believe that this is the next generation of shopping experience and provides a competitive advantage for sellers and retailers. Unity is also partnering with a large car manufacturer in Japan, an electric car manufacturer in China, a global industrial machinery manufacturer, a large technology education institution, and many others. And our simulation business is also doing well. We're strengthening our partnership with a very large car manufacturer in Germany. Our competitive advantages are our real-time 3D rendering capabilities, our design visualization tools, and our approach to develop what our customers need versus selling them off-the-shelf solutions that may not work for them. I want to give you an update on Weta. The integration is progressing as expected. We closed the deal at the beginning of December and have onboarded most employees. We're working to productize the award-winning tools such as Manuka, Lumberjack, Loki, Squid, Barbershop, High Def, City Builder, and many more. With Unity's deep expertise in real-time 3D, these world-class tools will be available to creators and artists on the cloud. The largest opportunities are within games, film, animation, and advertising. As mentioned, productizing these tools will take approximately 2 years. Now on to guidance. We're entering 2022 with good business momentum. For the full year, we're guiding revenue to $1.485 to $1.505 billion, or 34 to 36% year-over-year revenue growth. As communicated last quarter, we expect Weta effects to contribute approximately $70 million in revenue in 2022, or $66 million incremental to 2021. We will report this revenue stream under Create. Our guidance for the first quarter is consistent with the expectation for the full year of 34 to 36% revenue growth, or $315 to $320 million. For the full year, at the high end of the range, we expect non-GAAP operating margins to improve by 200 basis points year over year to minus 2.6, which represents a loss of $39 to $41 million. This assumes incremental operating expenses as we return to more normal working operations and travel. For the first quarter, at the high end of the range, we expect non-GAAP operating margins of minus 7%, an improvement of 300 basis points from the first quarter.
I feel like some people are
2020.
going to say that Unity is now only going to be growing
Non-GAAP
through
operating loss is
acquisitions.
expected
And it's going
between
to be,
22 and
I think, a
$23
viable
million.
point.
We're forecasting 343 million fully diluted shares for Q1. For modeling purposes, and in line with our historical performance, we expect the first half of 2022 to account for about 45% of the full year revenue and the second half to account for the balance 55%. We expect Create to grow at a faster rate than Operate in 2022. For the full year, we expect positive free cash flow, which includes Weta's FX front payment for full 4 years of license fees in the first quarter of 2022. We continue to expect Unity's revenue to grow at or above 30% over the long term and to break even on a non-GAAP basis within 2023. With that, let me turn the call back to Richard.
Great, thanks very much. Okay, we'll open up the call to live questions in just a bit, but before the call, I asked.
What did you guys? I couldn't hear. They mentioned something about free cash flow. Did they say free cash flow positive
Richard,
by
you still here?
2023?
We lost you, Richard.
Richard, come back.
Interesting.
My,
Richard, are you here?
I'm here.
You're on mute.
It says I'm not on mute.
Okay, we can hear you, Richard.
All right, yeah, I don't know what happened there. Kept getting muted by the host. In any case, no worries. Okay, we'll open up the call to questions in a bit, but before the call, we asked the analysts to send us some of their most thought-provoking questions. We culled them down to the best 3 that we will answer now, and right after that, we'll go to live questions from our panelists. So the first question comes from Kash Rangan at Goldman Sachs. It might almost be an understatement to say that there's a lot of transitions happening in the software world, 2D to 3D across multiple industries, new business models, and so on. And of course, that's probably a 2-hour conversation, but we'll keep it much shorter. But this is a good question, I think, for John to just kind of quickly frame kind of the cross currents, how they're playing out, and where Unity can capitalize on these trends.
So it is a great question. So headline number 1 is that my expectation is the use of real-time 3D interactive technology is going to expand manyfold. I've said this dozens of times from prior to our IPO to now. It's, some people call it the metaverse. But one part of it is industry after industry.
John is making it seem like he's never used the word metaverse in his life.
Experiences. And we're seeing that in so many industries now, it's almost hard to keep track. Second part of that is gaming industries continuing to expand. And of course, with Unity, we're bringing artists onto the platform to substantially increase our revenue take rate as part of that. So headline number 1, what's our role? Our role in all of this is first, and I think it's a good analogy to the gold rush, we're Levi's. Lots of people are doing all sorts of things, striking gold in lots of different ways. And we make the underlying technology where most of these real-time 3D experiences are built. We generate subscription revenue, ratable revenue from that. The second part of it, and the analogy is a little bit more stretched here if I want to think about it as a steam engine, but every one of these websites needs an engine, that engine for monetization, for analytics, for streaming, for the build process. That's what our operate team does. And so, we're not necessarily out there with picks and shovels looking for nuggets of gold. We're serving the entire collection of multiple industry companies that are building and deploying products, both to create those products and to help those products operate. And we generate money in both ways. Now, you also mentioned crypto. There's certainly a lot of noise about that. Within the game industry, there's a love-hate relationship. There's people that explain how it's wonderful and others that explain why it's a misery. I'd point out that most, if not nearly all, of the NFT-centric games that have been built and deployed today are built on Unity. We think that's really cool. We see many great things around innovation that can come from some of these new NFT-centric designs. We also see a lot of problems around energy consumption, schemers, scammers, a lot of things we don't like. And one of the things we think that we have an obligation is when we see innovation like this is to find a smart way to make sure that the good things happen and the bad things don't. We do that on behalf of our creators and we do that on behalf of their customers. So Unity's role, we're all the things that aren't the gold nugget finders in this new world. Huge wind behind our back for this industry. We are making the tools for creation, for operation, and we will bring them around to support virtually every metaverse or Web3 application type you can imagine.
Great, thanks very much. And Luis, Parker Lane at Stifel had a good question about our financial philosophy, kind of how we think about the economies of scale, growth, and profitability. You touched on it a bit on your prepared remarks, but maybe if you just drill down a smidge more on that, it'd be great.
Yeah, thank you, Richard. A great question. So I think, if I think at a high level, the framework we use to make investment decisions is very simple, which is we invest in those ideas that create the most value to our creators and to our shareholders. So we've talked a lot about creators so far in this call. So let me spend a little bit more time about shareholders. Of the three drivers of shareholder value creation, that is revenue growth, margin expansion, and the free cash flow efficiency, the one that will make the biggest difference for us at this particular point in time is revenue growth. Just think about it. We just crossed $1.1 billion and we operate at a $45 billion market. So we are about at 2% of the market. The take rate is way too small and we have business momentum. So that is the biggest driver. Just think about the difference of growing
Luis
at
is
a
getting me
20%
excited right
CAGR
now.
over several years versus 30 versus
Pump that stock
40%
up.
and the cash flow potential of that. Now, that doesn't mean we're not going to pay attention to margins and free cash flow. We definitely will. So if you think about what we've done since 2019, so between 2019 and 2021, we doubled our revenue, right? That's what we did. During that same period of time, we improved our non-GAAP operating margins from minus 16.9 to minus 4.6. So significant improvement. And obviously we made similar progress on free cash flow. So we actually have been driving both or all three drivers. Now, how have we done it? Which I think is very important to understand. We've been able to do that because we've been driving efficiencies in gross margin and at the same time leveraging sales and marketing and G&A. But we've actually invested heavily in R&D. In fact, our R&D budget has doubled between 2019 and 2021.
That's what I like to see,
which means that we held the
in R&D.
percentage of revenue flat during that period of time. So what can you expect from Unity going forward? So in terms of revenue growth, now, as we just said, you can expect us to grow between 34 and 36% in 2022, and then at least 30% thereafter. So we will continue to drive that, this driver, which is critical for us. At the same time, we'll continue to make progress on non-GAAP operating margin. We expect to improve our margins by 200 basis points in 2022, to break even in 2023, and obviously we'll continue to make progress to become profitable thereafter. And I would expect free cash flow to follow very much in line with our non-GAAP operating margin improvements. The last thing I'll say is that we're very strategic in where we invest our R&D dollars. We basically apply two filters. Filter number one is, do the ideas and projects generate value on their own for both creators and shareholders? And we make sure that every project has the potential of doing that. And then the second thing we do is we look at our portfolio across, and we make sure that it's balanced across businesses, and we make sure that it's sustainable in growth. We created a methodology that I think other companies use called H1, H2, H3, which makes sure that we're investing in the short term, in the midterm, and in the long term. So that's overall how I would respond to that question, Richard. I hope that's clear.
Great. No, that's super helpful. All right. So, and one of the things we like to do here is highlight the depth of our management team. And you'll remember last quarter, we introduced Mark Witten, who runs Create. So this quarter, we invited Ingrid Lastillo, who's our Senior Vice President and General Manager of the Operate Solutions, to add some context to some of the questions you might have in that area. And so we've had a handful of questions with a similar theme. Bhavan asked it at William Blair, Matt Cost at Morgan Stanley, Stephen Jew at Credit Suisse. But the question is basically revolves around this. Is like, we're seeing a lot of consolidation on the studio side. And how are you thinking about kind of first-party data approach that seems to be an effort of some of these studios versus the contextual dynamics offered by the Unity platform?
Yeah, hi, everyone. Glad to be here. So, our contextual approach provides numerous advantages. Even the largest game companies out there have a few 100 million DAUs or so. We reach more than 3 billion devices. And unlike any other ad tech companies, the majority of mobile games out there are made with Unity. Using our engine and our game services, that's not quite the same as an ad tech company claiming a 3 billion reach. We have deep context about gameplay, what the players like to play, when and how they play the game. And in gaming, that has proven to be the most relevant data for advertising. And it's going to take quite a while for anyone, even to get to a quarter of the context we bring to our developer audiences every day. So let's quickly address first-party data. Let's assume we're talking about first-party games data. First-party data is not bulletproof. First, games are a hit-driven business, and even the best of games have a decay curve. So you really have two choices if you're in that business. Either you create the next hit game, which we all know it's pretty hard to do, or you spend to buy studios that are producing them. And that's hard to sustain. The second thing is being end-to-end with first party in this ecosystem is nearly impossible. So no matter how many companies anyone acquires, contextual data scales in a much more unlimited way, while first party is limited to users only coming to your own and operated game. So with respect to industry consolidation, what I can say is that we've always had, competition in this space, all varieties of it. And from the day we started 8 years ago, and we've consistently executed and taken and gained market share, including against the largest companies in the space.
Thank you so much. All right, well, now we'll open it up to, we see a bunch of your virtual hands up there. So virtual hand number one, we'll have Kash Rangan at Goldman Sachs. If you have a question, that'd be great.
Hi, thank you very much, and really enjoyed the presentation. Spectacular results. John, if you could just give us an update on the Weta acquisition. I know that we were really excited about the expansion into the designer versus the developer audience that you were excited about. Just wanted to follow up on that. How do you think the synergies are playing out since you closed the acquisition? You've had a chance to do even more work. Curious how you gauge the synergy between the core technology and how Weta can play into synergizing your design business and operate business. Thank you very much.
All right. Should be on here momentarily.
The awkward moment of just staying there.
Talking to a dead microphone and a dead camera. So thanks for the question. Great question. So one of the things Kash, I've been really kind of overwhelmed by, and I've had a lot of conversations of late. I'm not going to name the people I'm having conversations with, but if you read the Hollywood rags, these are the names of all the people that matter, and similar set of conversations with folks in the game industry. And the first synergy that comes out of this is we just liberated one of the coolest assets that existed in all of art and all of technology and all of content creation, the Weta tool set. The number of companies that are knocking on my door to say, we want to be your pilot customer because we want to have those tools is pretty substantial.
That is pretty crazy. And that is pretty awesome to hear.
I can't really overstate how much interest there is in engaging now that the tools aren't captive of a single company that's got, if you will, ILM does not want to use tools from Weta. They compete. ILM now wants to use tools from Unity. Now, I'm using ILM as an example. I don't want to point to them. So let me take that last part about the naming of them, but the notion of it is pretty clear. The second point I would make is that this exists not just in the film industry, but in the game industry that wants their stuff to look that good, and architecture and other digital twin arena, they want their stuff to look that good. And so the liberalization or the democratization of those tools is a winner. The second thing, and this is a little bit more subtle, but just as important, the whole metaverse of the real-time 3D revolution means that folks that used to work in 2D are now increasingly want to work in 3D in real time. These are gigantic data sets, and it is really, really hard to take something from the cloud into your internal system to use it onto somebody's individual desktop and move these things around so people can create and deploy. The DevOps problems around that are legion. And so the next part of this is while we take the Weta tools into improved UI so other people can use them, not just the people that have been trained on them. And we integrate them with Unity and other tools and put it into the cloud. We solve a really huge problem, which is just the entire creation process, making it simple and accessible. This is why you saw things like Parsec. It might not have made as much sense when we did it, but we knew other things were coming. When we put all this together, what's exciting about it is it solves massive pain in the creator community across many industries. And it also puts us in harm's way of yet another new ratable business model that I think is going to be, Unity getting our share of the value of what problems we solve, which is what we've always been doing. So great question, because it really gets to two huge parts of the value proposition. This asset, the Weta dual chain, is much more valuable inside of Unity than it was as an independent captive part of WetFX. And then connecting it to Unity and other tools is a super valuable need for people in these industries. And that can accrue back to our shareholders.
Super compelling. Thank you so much.
Thanks.
Congrats.
Bhavan over at William Blair.
Great, thanks team, and let me echo the congrats, Cash. It was a spectacular quarter. I guess it's a question maybe for John and for Ingrid a little bit. So I know Cash asked a question about metaverse, but I want to delve into that a little bit more. John, you said, okay, we're not the guys who are going to be building those nuggets or finding the nuggets. We're going to provide that platform. But if we fast forward 5 years, we've got lots of this stuff that's being developed in Unity. I'd love to walk through how you think the data layer, the way you interoperate between consoles and games and different games, ends up being a huge strategic value to you from the operate side. So imagine being able to target these people across this multi-data layer, multi-metaverse, multi-3D experience. Help me think through how you're thinking about that and what that might look like 5, 6, 7 years down the road.
Well, hopefully sooner than that. But so most all content you consume today, television or any other sort of content other than a game, is basically an artifact by the time you have it. It's a model, it's video. It doesn't change. It is what it is. It is one fixed thing. And the only software that's typically operating on it might be something to stream it. And that usually, a big part of that is a compression and decompression algorithm. So it can go more efficiently over, whatever transmission technology is being used over the air or, cable or satellite or whatever that's, just the files are too big to move around. And so these artifacts are, I think, going to be dead and buried by 2030. That's just not the way it's going to work. The way it's going to work in the future is all of the work that a Peter Jackson, together with the cinematographers, together with the artists and the technologists there, that's going to be data. It's all a giant piece of data. Now, what operates on that data are a set of tools that turn that data into the next frame. And remember, now that frame is being produced in real time in response to user input. Now, that might be you sitting on a couch wanting to compose your Christmas picture, put different clothes on your kids. Instead of going to like Nike or Everlane or all these websites, you say, I want all of us in whatever color. That'll come to you. That'll be the metaverse version of shopping. But whatever that is, it's going to be data separated from, it's not an artifact. It's data that gets operated on by tools. And those tools will be things like Lumberjack or things like, the Manuka rendering system or Unity to create an outcome that you see as a frame, or you see as a immersive experience if you got an AR or VR device on, or if you're consuming, like you might have seen the Metacast stuff that Peter Moore showed, those kinds of things. So massive amounts of data, really sophisticated tools, and these tools create the frames for you to consume in the time. So where is Unity going to be? We finally get to be simple in 5, 6, 7 years. We've been building and operating this hotel at the same time. It's going to be pretty simple. The tools will be there. Users will collaborate. They will go to our cloud offering. They will create what they want to create. It's always going to be up there. They connect their user to it. The user consumes it. And we will be able to create, I believe, systems where the most sophisticated, high fidelity creators, people making high-end film or high-end games or high-end, car configurators or digital twins, they're going to have access to the finest of tools, multiple layers down in an editor. And we're going to, over time, simplify it. So your high school kid can make a simple game or a simple movie using the same tools. And, maybe not the level of fidelity and the level of complexity. And that puts Unity in the same business we're in now, create and operate. That doesn't change. But then there's another business that surrounds, ratable business around that cloud instance of what we're describing. And I think we're uniquely positioned to create value for customers in our space, because when these files get to be gigabytes and then petabytes, moving it around is really hard. The way it typically works now, and it's a misery for the DevOps side of content creation, is no matter what the art they're trying to produce, whether it's a video or it's a game or it's a digital twin, those pieces of that data are moved onto one PC or Mac or PC or workstation, and another and another and another, and they're reassembling it and they're pushing it back out again, and then moving it into sometimes hosted cloud services and then moving it back so they can operate on it.
You can really tell when John starts to get excited about the business, and I really do like it.
Yeah, it's just a lot simpler. So the line of sight we have is we've been building something that's got a lot of complexity as we describe it. You've heard this over the years, been an investor for a while, but now or covering us for a while. The simplicity comes as we get closer to what we've been approaching, because it's no longer a description of what we're building. It just works. Now, Ingrid, you might want to speak to one major piece of this, just to add to Bhavan's question, which is how important in this is the operate side, and in particular, the self-serve notion of the operate side.
Yeah, thanks, Bhavan. So a couple of things, I think if we think about, John talked about the next rendition of Metaverse Destination. If we think about it, all of those renditions will have one thing that's true, which it will be some form of multiplayer experiences. With at times millions of concurrent users coming together in an experience, and on the data front, an experience like that, there's always going to be some kind of bad behavior. So you need intelligent moderation tools. All of those experiences will need monetization. And that requires obviously some intelligence and data to be able to serve the most relevant monetization solution, and engagement. Whoever is the creator of that experience would need to engage with their users, and they want to run engagement campaigns, etc. That requires a similar set of data that we use today to make sure that our developers are successful in running their games.
Got it. Thanks for the detailed response. That was really helpful. Appreciate it, guys. Thank you.
Matt Cost at Morgan Stanley.
Great, thanks. I think it says I can't get my video on, but that's all right. I'll do it on audio. So I guess just on the create side, it says more. That oh, there goes the video. Can you guys still hear me?
Yep.
Yeah, we hear you just fine.
Yeah. Okay. Cool. Sorry about that. It froze for a sec. So on the create side, it looks like you put up the strongest quarter really ever. I mean, even if you back out $4 million for Weta, it was bigger dollar ads, than you had last quarter, which I think was already the biggest quarter you had done. It was a 1,500 basis point acceleration. I guess, are there any specific drivers that you would point to in create that drove this strength, and has something changed in the past 2 quarters?
I'll give a high level to that, and Luis, you might want to add to this. But the first is that we finally gotten to some scale on non-gaming applications, digital twins and verticals. And so, we talked a lot about how we're getting early product traction, and now we're getting more substantive product traction as part of it. The other part is, I think we've done a really nice job under Mark Witten's leadership to help simplify and clarify our go-to-market. And then lastly, we've seen I'd say an increase in productivity out of R&D and in producing products and features that hit the product market fit that you want to see. But it's frankly, it's what the stuff we were talking about, I have to admit, took a little longer to gestate. I'm happy to be here now than looking to wanting to be here as I was a year ago. But we feel really good about the underlying trend lines in Create. I mean, I could point to individual customers, but you see the announcements. They're now starting to happen with some level of regularity, and that happens with things like Hyundai, which you see in the non-gaming side, or you see you didn't used to see major companies like Riot produce multi-platform inclusive of console on third-party tech, and now they do with Unity. So you're seeing it in the market. Took a little while to catch up on the execution side because some of these things take a while to build, with the sales cycle can be a while.
I think that's
Yeah,
probably
thanks,
one of the
John.
coolest
Just
thing
to
is
complement
I think they're
in
very
line with what we said earlier, we're getting
with
good
the
traction
outside
both
gaming
in
market.
games and outside of
But if they
games,
see growth
which is
there, I
just
think it'll be
terrific.
good.
No, we expanded our market share within games from a pretty healthy base. And as you heard me say earlier, that's coming from AAA games all the way to indies games, right? So we're covering more and more customers across the board. And I think it was really a good non-gaming quarter. No, I talked about some of the success stories. No, a lot of in the auto industry. I mean, from auto industry to education to machine manufacturers, right? So we're really seeing a lot of traction with digital twins, and we'll continue to drive that. No, we think that there is a lot more opportunity ahead. Now, not every quarter will be perfect, right? We'll always have a quarter there where we struggle, but we're very happy with where we are today. Very, very happy.
And for those of you that have seen the sports Metacast stuff that we put out there in some of the videos, that's basically a digital twin. What are we doing? The cameras are IoT. We're consuming the data of 50 to 120 cameras, depending on the sport and the instance, and then we're presenting it back. But when you look at that and imagine that as a digital twin, look how dynamic it is. If you looked at digital twin applications coming out of most companies, they move about as fast as a painting. Nothing's really happening there. There's some data that's coming off of it. It's a static model. People are starting to see what you can get in the dynamism off their data sets, and they like what they see. Unity has competitive advantage in this space, and I think it's being internalized by folks across multiple industries.
We don't talk enough about our net expansion rate, and 140%, just massive. I mean, very few companies are able to achieve that, and we've been able to sustain it for a pretty long time. And that is both create and operate. So very, very healthy there as we continue to add new customers. So just wanted to add that piece.
Great, thanks, guys.
Thanks so much. Brent Bracelin over at Piper.
Thank you. Great to see the team here. I'll just go ahead and ask the question here. I want to drill down into the operate business. Obviously, we spend a lot of time with investors talking about the ad part of operate. But if I look at the Unity Gaming Services Suite, I think there's 8 add-on products. They're all in beta. Just trying to think through growth levers for operate, maybe for Ingrid and you, John. What's the early feedback on some of these new add-ons? Can they become incremental kind of growth drivers to the ad business in 2022, or are those really seeds to drive growth in 2023? Any more color around how we should think about the levers for operate beyond just ads, which obviously you're gaining share?
So I'm going to take part of it, but I do want Ingrid to speak to this one. She runs all of that. And let me just admit, it's fun to be in the same room. I did my one-on-one with her an hour ago, and we spent the last hour with this on a whiteboard. All of the services, how they plug in together, how they're synergistic, how they draw people into revenue services, how they solve problems. I think one of the less appreciated but more important parts of Unity is just how well this works and how well it's going to allow us to scale. And some of the principal components are just a couple high-level points. One is all those game services. Typically, they have 2, 3, 4, 5 vendors to do all of these things, all different data types, different data sets. It's impossible to run that way. It's a mess. And so we solve a mess. All of these things require, pretty tricky implementation. Ingrid is maniacally focused on self-serve, hit a button and it just works. And they all connect, magic, to a revenue producing service that we love called Multiplay. So Ingrid, you might want to take it from there. I'm taking a little of the parade because it's a fun parade to stand in front of.
Oh, thank you, John. So first, let me just, you alluded to 8. Actually, the feed that is Unity Gaming Services combined 14 services into one platform, one dashboard, one login. And to John's point about self-serve, we made it so simple for our developers to quickly launch multiplayer cross-platform games with just a few simple clicks from the editor. 59%
That's a
of
great
all
way to put it,
Americans are playing multiplayer games. So we are seeing at Unity that the interest in building these games is there from developers, from studios of all sizes, but it is just too hard. Till then, for the small to mid-sized studios, they need to hire an army of network engineers, security engineers. And now they have access to a platform like ours that reduces the resources and the risks to realize their vision. So we've seen thousands of projects started using Unity Gaming Services in less than 3 months. And the feedback has been really positive, but also helpful. We still have a lot of work to do to round out the performance and feature sets, as they need in the platform. And I think what is really exciting is that we are seeing early some of these smaller studios going further than they've ever had before, and that makes us really excited for this space.
Sounds exciting, and 14 instead of 8 implies you've been really busy. So great seeing you again, and thanks for taking my question.
Thank you.
Thanks, Rob.
Thank you. All right. Well, we have time for one last question from Martin Yang. There you go. There he is at Oppenheimer.
Hi, thank you for taking my question. My question is around digital avatar, and now you have a lot more creation tools. How do you think about providing direct venues for creators to monetize their digital creation through Unity?
There's a lot of pieces in that. Let me just have a little bit of fun by throwing water on one idea that I think seems to have gotten a lot more currency in the market than I think it probably deserves, is the idea that we all want one avatar. I really don't want to show up in my swimsuit for an RPG with a sword in my hand. If that's my avatar, I think we're going to want a lot of things that are more dynamic than that. A second thing is with the acquisition of Weta and Ziva and some of the other things we have now in our portfolio, when people are going to try to create avatars, look at the young lady you just saw. She doesn't truly exist, but the average creator can do that. Look at the movies like Avatar and the Marvel stuff created with the Weta tools. You can do anything in Unity. And so, my sense is that we are going to see a huge amount of creation on that side. You're also going to see something, again, you didn't directly ask this, but I think what's more interesting when it comes to some of these asset creations, most NFTs today are just really JPEGs printed on a blockchain. What's interesting in real-time 3D is that these assets have utility, strength and resilience. Anybody who's played a game know how an asset can have utility. And one of the things that we're hot on the trail for is enabling the assets that a consumer might want to own and setting them up in a smart way so the underlying registries of value can be built upon and traded. And so we see a lot of opportunity. We also see a lot of charlatans out there doing some pretty miserable things. And it looks like, some of them look a little bit like Ponzi schemes. And so our eyes are wide open, huge opportunity filled with landmines. And one of the things that we truly believe is Unity's place in the world is to help our creators realize the good part of something without having to suffer stepping on a landmine. And we started that way when we enabled creators to get to multiple platforms. Before Unity, most content was built with tools from one platform to make the content for that platform and tools from another platform to do it for another platform. It's expensive, time consuming, and it resulted in things like some of the best game companies in the world, like they took, was it Supercell and Clash of Clans, took them like a year to come out on Android. I mean, that is just massive lost opportunity. And so we help our creators solve these problems. And the area you're asking one about has lots of problems that we've got our eyes wide open and clear about in ways we think.
Wait,
we
what
can
was the
help
question
solve
again?
them for our
Oh,
customers.
digital avatars. Never mind.
Thank you very much.
All right. Well, thank you very much. It's good to have a lot of things to talk about. I'll let John kind of conclude, but just so you know, at Unity, we'll be at the Berenberg, Daewoo, Morgan Stanley, and Wolf conferences this quarter. But John, if you just want to close up, that'd be great.
All right. Well, hey, everybody. Thanks for being with us today. Good evening to those of you on the East Coast. Good afternoon on the West Coast. But we enjoyed it. We hope you did too. So thanks again.
Thank you, everyone.
Yeah, this John was ready to go home. He's like, "Thank you guys for showing up. Well, we're out of here." Yeah, so that was pretty cool earnings. I mean, Unity is one of those companies that, even though it did provide 13% today, it's one that I believe will continue to be highly, highly volatile for the next few quarters. But I do believe in the long term of things, this is going to be one of my best returns in the next 3 to 4 years. So it does seem like this quarter was just a non-gaming quarter. Obviously, they did really well with gaming, but non-gaming took a huge growth. They do mention that, hey, that's not what they believe is going to happen every quarter. So once I heard that, I do believe that they might be a bit conservative in some of the guidance that they give. And if next quarter continues to see strong growth in the digital twins and the outside gaming, we're going to see another beat. So I'm really liking Unity. What price did you get into Unity, Mamba? So, I mean, I bought in. I've been dollar cost averaging pretty much throughout the whole year. My price target is somewhere in the low 90s. Low 90s. It could even be in the high 80s, Mamba. And it's probably one of my top 5 positions. I can't tell what number it is. It's either number 4 or number 5. Yeah. So I purchased a lot when they first IPO'd. I purchased through this uptick, but most of my purchases were around this time frame right here, when it was between 80 to 100. I haven't purchased any during this uptrend. Unfortunately, I knew I was going to be talking about Unity soon, so I can't purchase due to some rules. But I obviously hindsight is 2020. But if I knew earnings weren't happening today and I wasn't going to talk about it, these 90 price points were super attractive. I think Unity, anything over $100 looks pretty well. Anything under 90 is like load the truck. If it ever goes below 80, it's like I'm putting insane amount of money as I can. Fizz, I actually was hoping for it to tank to some extent too. But at the same time, I'm not sad it's up either. So win-win. Yeah, I agree, Fizz. I mean, management is really well. I really do like... I really do like management team. John is, I mean, even though he's an old person, you can tell when he gets excited. When he was first talking, he wasn't that excited, but then when you start talking about some of the growth potentials, especially in the Weta tools acquisitions, it seems Weta is going to be an amazing tool set that they've added to Unity, and he's super, super excited about that. Yeah, so John's pretty cool, and Luis, whatever, I think he's the CFO. Was that the CFO, Luis? That guy's also pretty chill too. It seems management, and this is actually the first time that I've noticed Ingrid. I forgot her name, but the president of the president of management of Operate Solutions. I do wish she comes on a little bit more often. I would like to hear a little bit more about the Operate Solution sides. It does seem like the advertising business continues to do well for them, especially because they have a lot of that kind of first party data, or kind of the data from users using Unity. And yeah, so overall strong quarter. Not planning on selling anytime soon. Any price under 100, if I have the funds and the ability to purchase, I would purchase. Anything over 90, that's when I would definitely add a big position to the stock. But anyways, guys, I hope everybody had a good week. we did 3 live streams today, and I'm happy. I mean, 3 live streams this week. Tuesday we did AMD. Wednesday we did, what did we do yesterday? Yesterday we did Facebook, and today we did Unity. I think next week we might have some cool ones. Jose, I saw you talking about PayPal a lot when it was at 200. Now it's at 120. So Mamba, I haven't looked at their earnings. I really did like PayPal prior to earnings. I haven't given any insight because I haven't really looked at their earnings call. I'm gonna guess it's some form of overreaction. But prioritize like this week we had AMD on Tuesday. That's a tier 1 for me. We had Facebook Meta. That was another kind of big player for me. And today we have Unity, which is another tier 1 company. So I focus on my big players, the ones I care about the most, or the ones that affect me the most. I'm gonna go down the list. PayPal is definitely in that list of companies I'm gonna take a quick look at and try to decipher what happened during their earnings. Because I personally, I feel like this quarter alone, I've been using Venmo and PayPal a lot more frequently. And I feel like it continues to grow market. So I want to see what happened there with PayPal. But I'll definitely I'll make a video. If not this week, then at least maybe next week, Mystical. I don't know. I mean, Venmo, a lot of people use Venmo. And I guess that is true, right? Because there is that nice amount of competition. There is that nice amount of competition in the overall fintech and digital wallet. I wouldn't be surprised if PayPal goes out and does some form of acquisition in the future. I think PayPal can actually go and buy Robinhood if they want and kind of become a true competitor to like things like Cash App, where they offer digital wallets and some form of trading platform. So interesting for that. But anyways, guys, appreciate you guys coming through to support the channel. I hope you guys enjoyed the earnings call and my overall feedback. But see you guys tomorrow. I probably won't do a live stream, but I'll probably do a live stream sometime next week. So peace out and see you next time.